Looking to get funded? Smart Prop Firm is your go-to platform for exclusive deals on the top futures prop firms. Earn up to 5% cashback and enjoy payout protection in the event your firm doesn't pay you out. Use code SMART at checkout. Click the link in the description to maximize your trading benefits.
Welcome to a brand new series that we're going to be doing on this channel, breaking down various concepts that I use in my trading, the theory behind them. We're going to break them down very simply so you know exactly what you're doing, as well as how I was able to, with the help of a very smart developer, code these concepts into an indicator to have that fully automated in order for us to save hundreds of hours of screen time and just completely streamline our trading. This is episode 1. The topic is going to be order flow. It's a great place to start because it is the absolute core of everything you will be doing and learning moving forward. Let's get into it. So the video is going to be split into two main sections. In part A, we're going to be going over the theory, and in part B, we're going to be going over automation. And I should also include part C, which is actual chart examples, and we're going to do that at the end. So what is order flow used for? Well, before we even answer that, let's answer the question of what is order flow. And it's very simple. It's in the word itself. Order flow is simply the flow of orders. Are there more buy orders than sell orders flowing in the market? If there is, well, we have bullish order flow. If there is more sell orders than buy orders flowing in the market, you're going to have bearish order flow. Now, it's not as simple as seeing a bunch of up close candles and then saying, that's bullish order flow. There is a specific way we visually identify this, which I will go over in the next slide. So now what is order flow used for? Well, it's used to determine a bias, right? Where is price headed? Higher or lower? Bullish or bearish? The first thing I'm doing when I'm opening literally any single chart on any asset, on any day, on any time frame is looking for what is the order flow telling me. What is my bias? I find bias by using order flow. And once a bias is established, order flow will also tell us the narrative, right? Because the first step of looking at any single chart is to determine the bias. And then the second step is to determine the narrative. The narrative is simply from what PD area will price move from. And if you don't know what a PD area is, it's simply a support or resistance level. These are your fair value gaps, your fair value areas, which by the way are literally just order blocks, breaker blocks, mitigation blocks. They're all the same thing. They're all under that umbrella of what is a fair value area, as well as all your swing points. We will be diving deeper into how to find bias and narrative a bit more in the chart examples, but now let's first understand the most important thing here, how to actually identify an order flow leg, and we can just call it OFL for short. And what an order flow leg comprises of is a swing low to a swing high with a fair value gap in the middle, in between the swing points, which is what the image in front of you is. You have a swing low, and then you have a swing high with a fair value gap in the middle. If you remove the fair value gap from this leg, this would not be an order flow leg. It's simply a low probability leg, right? The FVG is required here, and the lack of a fair value gap makes it low probability. The fact that there is a fair value gap present makes it a high probability leg, because fair value gaps show the true intention of price. The story is all told in the fair value gap. Expansions are simply not possible without fair value gaps. I want you to take a look at every single trending chart and tell me if you can't find a fair value gap. There will always be a fair value gap where there is a trend. There will always be a fair value gap where there is expansive price action. And expansive price action is where you will find high probability trade setups. Whereas in sideways movement, in chop, in consolidations, you might not find any fair value gaps. Or if you do find a fair value gap inside of a consolidation, that is a low probability fair value gaps, because inside of consolidations, fair value gaps don't work. This is a bit off topic, but in consolidations, the high probability trade setups and the high probability conditions occur at the external ranges of a consolidation. But in trending and expansive conditions, there will always be fair value gaps. So that is your signal of high probability price action. Now, the actual highest probability order flow legs that you will find are those which formed off of a previous order flow leg. So think of it as a fair value gap that formed off of a previous fair value gap. This is what is called confirmed order flow, since we have confirmed that price is respecting a in a bullish example, a discount array, and disrespecting premium arrays to then create new discount arrays, creating nothing but bullish arguments for price to continue pushing higher. And just for my newer guys watching these videos, if you have no idea what a premium or discount array is, remember what I mentioned earlier in the video. A discount array is simply a support level. So that can be a bullish fair value gap. A premium array is a resistance level. So that could be a swing high. For example, if we take a look at this, you will notice that price respected a discount array. Let's say that this low is a fair value gap. It's not marked, but this low, there's a gap right here, and there's a fair value gap. Imagine that's where this stung into. Created a new discount array. So the new discount array is this fair value gap. Remember, just a new support level. Disrespecting a premium array. What I mean by that is it disrespected this swing high because we had a very strong candle close right through it, just running that high and disrespecting it. So we're respecting discount arrays, disrespecting premium arrays, creating new discount arrays. This is confirmed order flow. Now, this extra tip right here is worded a bit complex, so I'm going to simplify this right here. When we are referring to order flow and when we're actually looking for order flow, we're always looking at the most recent order flow leg on the current time frame we are analyzing. We want to be doing this on a top-down perspective, right? Starting from the monthly, down into the weekly, down into the daily, down into the 4-hour. Order flow will say different things on different time frames, which is why we want to be looking at it from a top-down perspective, because price is always going to be subordinate to the time frame above it. This might be a lot right now, but do not worry. In the chart examples, I will bring this up again and show you exactly how we find order flow from a top-down perspective using the most recent order flow leg. When it comes to aligning order flow, the highest probability trades are always going to be the ones that are in the same direction as the current higher time frame order flow. This right here in front of you, it's a daily chart. Each of these candles is a day's worth of price action. We very clearly have bullish order flow. Your lowest probability trades are going to come from going down into the lower time frames and looking to short towards the daily fair value gaps and using those fair value gaps as the draw to look for shorts into. Whereas your highest probability trades are going to come by just waiting for the retracement into the higher time frame fair value gap that is aligned with the current order flow direction, and then proceeding to look for longs in that same direction as the order flow. Counter trend trading the order flow is always going to be inherently lower probability. Because think of it this way, if we are bullish and we are in a bullish trend, the most likely thing to continue happening is just being bullish. Like, we don't have to retrace into the fair value gap. If we are bullish, we can just move higher for no reason. See what I'm saying? Like, we don't have to retrace, and you shorting towards a daily fair value gap against the higher time frame bullish trend is lower probability, and price just might reverse for no reason other than the fact that we have just been bullish and you decided to short that. So when it comes to determining bias, remember, bias is simply where is price currently headed, higher or lower, bullish or bearish, and we can confirm our bias by looking at the current order flow. If we have bullish order flow, we'll have a bullish bias. You'll notice that discount arrays are respected and premium arrays are being disrespected. If we have bearish order flow, we have a bearish bias, and you'll notice that premium arrays are being respected and discount arrays are being disrespected. So let's take a look at this bullish example right here, this bullish order flow leg. Remember, when we're looking at order flow, we're always looking at the most recent order flow legs and making sure that they are in context of the time frames above it. We want to make sure order flow is aligned all the higher time frames. So like, for example, we have this daily bullish fair value gap. I would not long it if there is a weekly bearish fair value gap that we are stinging into right here. That would mean that the weekly has bearish order flow and the daily is bullish. So price is now more so uncertain and trapped right there. And that is a fair value gap that you would want to avoid because order flow is not aligned across the time frames. That's very important. Again, this will make much more sense once we dive into the chart examples where I could actually change time frames and show you these things on a live chart. So don't stress out if you're not getting it by just looking at a static image here. But okay, let's imagine that the weekly order flow and monthly order flow, all the time frames above, let's pretend this is a daily chart, are in alignment. We now have this bullish daily order flow leg, this bullish daily fair value gap that we are retracing into. Now, if you've watched some of my previous videos, you would just know this as simply IRO to ERO. which is true. IRL to ERL is literally order flow. They are the same concept. So let's pretend this is a daily again. And now if we actually want to get involved, we would need to find the narrative, which again is told to us by order flow. So remember what the narrative is. It is the very important question we want to be asking ourselves once we determine a bias. From what PD array will price move from if I am bullish? And we want to be looking for our narrative array on the properly aligned time frame. So from a daily, we would go into a 1 hour, and now we're looking for 1 hour order flow. We're looking for a 1 hour impulse shift off of this daily. Now, if you don't know what that is going to be the next video in the series, so we will go very deep into that. Do not worry. But simply said, we are looking for a 1 hour order flow leg displacing away from this daily, and that is our narrative array. And if we want to be swing traders, we can also just take the entry directly right there. But if we want to intraday trade that off of that 1 hour for value gap, so right here would be a nice area for you to go down into the 5 minute and look for another impulse shift there from the 1 hour, looking for your 5 minute impulse shift or whatever 5 minute entry function you might desire. So then we get a new order flow leg right here. And remember what this means. We have now confirmed order flow on the 1 hour. This is even more high probability. So we have this order flow leg, swing high, swing low with a fair value gap in the middle. We also have this fair value area, which is just the overlapping high right there. If you are an intraday trader, this now creates a context area, the area in which we want to be trading inside of. And again, this is all fractal. From the daily, if we were to go back here to the last slide, this is your context area from this daily fair value gap to this swing high. On the 1 hour, if you want to be looking at 5 minute setups inside the 1 hour, this 1 hour IRO to ERO becomes your context area. This is simply the boundary and price we are looking to actually place trades within. And this 1 hour for value gap right here, this 1 hour IRO to ERL, internal range liquidity to external range liquidity. Again, if you don't know what that is yet, I have a video. I will just link that in the top right now. Please watch that after this. But this would have been a nice context area as well, with 5 minute trade opportunities likely having presented themselves for this move. So now let's get into the automation side of things. With the power of custom indicators, we have automated the entire process of using order flow for bias and narrative. So the order flow indicator maps out the most recent order flow legs simultaneously, automatically on all time frames. So this incorporates magnet theory, which is simply the higher the time frame of the PD array, the stronger the draw / magnet it will act on price. The order flow indicator automatically plots higher time frame fair value gaps so that you can avoid being blindsided. I remember back when I didn't have this, there would be times where I would simply get laser focused on one time frame and forget to check the higher time frame above me. One of the most important rules when it comes to trading and actively looking at charts is to always keep in mind of the fair value gaps that are being created on the time frame above you because of magnet theory, because of the fact that the higher the time frame fair value gap that gets created, the stronger of a magnet it will act on price. And if you don't notice this, you might take a fair value gap that you think looks high probability, but it's not because there's a higher time frame fair value gap just below it, meaning that the lower time frame fair value gap you're looking at is likely to fail. It's very low probability. So for example, right here, we have this 4 hour fair value gap that if you did not know to check the higher time frames, you didn't bother looking at the higher time frame order flow, you would have thought that this is in alignment with everything. We can easily move higher off of this 4 hour IO to ERL, and let's keep it pushing higher. Where over here, you'll notice that the indicator warns us about this weekly fair value gap that has just been created that price could easily draw towards to. And then the result, that 4 hour fair value gap ends up failing, retrade towards the weekly, and now we get an actual high probability fair value gap where all the order flow is aligned, where we have weekly bullish order flow, and now we have 4 hour bullish order flow, a 4 hour order flow leg displacing out of that weekly. This is high probability. This is not as a result of magnet theory, and the indicator would have showed you all of that. So it will also automatically plot your narrative arrays, and the indicator is coded very intelligently here. It understands the time frame hierarchy, and it will always prioritize the highest time frame fair value gaps over the lower time frame fair value gaps. So it's always incorporating magnet theory into them. Like an example would be if we were to have a 4 hour fair value gap develop here, maybe on this next 1 hour candle, a 4 hour fair value gap would get created right here. the 4 hours greater than the 1 hour. So what the indicator would do is it would delete all the 1 hours, only show the 4 hour, and then prioritize that and not the 1 hour fair value gap, since they are no longer relevant if there is a 4 hour just overlapping all of them. All that being said, it's finally time to take a look at some real chart examples. So let's get to it. Now here's our first example. We are on the euro dollar monthly chart. And remember what I said about order flow. When we are looking for it, we are always starting from a top down perspective. We are never going from the down up. So you're never going to start your analysis on a brand new chart you pull up, say on a 1 hour, and then work your way up to the daily and then monthly. You're always starting off on the monthly, working your way down the time frames, reading the order flow. So we are on the monthly, and based on this price action, based on what the indicator is telling us, we have bullish order flow. If we take a look at the most recent swing low on this monthly chart to the most recent swing high, we have fair value gaps in the middle right here. This is our most recent order flow leg. All our attention pretty much should just shift to this leg right here. Order flow is beautiful because it effectively clears up a lot of the chart and really narrows down our focus, because once we see that order flow leg, basically what we can do to the rest of the chart is this. And all we are now focusing on for our relevant PD arrays, the most strongest PD arrays are always going to be found on the most recent order flow leg. So this is our focus now. One thing I actually haven't mentioned yet is how the indicator actually labels the type of fair value gap it is. So as you can see right here, it says MBAG. That stands for monthly breakaway gap. And what do we know about breakaway gaps is that they are not expected to get retraced into. I have an entire YouTube video on this. If you want to take a look at it, I will link it up at the top corner over here. We have a bullish bias right here, straight off the bat on the monthly. We have that monthly breakaway gap down there. We don't expect to get filled or retraced into. So we could already have this expectation that we want to continue pushing higher now. So now we're going to drop down time frames and we're going to look basically inside of this range right here for a new order flow leg, a new fair value gap, an area that we can potentially continue moving higher off of. I want to look at weekly order flow and see, is that also pointing higher right here? So let's drop down one time frame here. And what we see is the indicator marking out a new weekly bullish order flow leg right here. This swing high to this swing low has this fair value gap in the middle. So on a weekly, we are also in bullish order flow. We have a bullish order flow leg. And over here, you can see that monthly breakaway gap also marked up there. So since that's a breakaway gap, we can already expect price to move higher off of this. This doesn't count as magnet theory in the sense that, okay, we have a monthly fair value gap below us. We need to be careful. This weekly is going to be lower probability. It's not, because that monthly is a breakaway gap. So that is a reason that this weekly right here is already enough to potentially move higher from. Now right here, we actually tried to push higher off of that weekly context, but failed. And that's okay, right? It's not going to pan out perfectly every single time. What ends up happening is we formed a weekly swing low right here inside of this fair value gap. For this right here, this is the exact topic we went over in my previous video, literally the one right before this one, all about pivot context. So if you watch that, you know exactly what this is. This is weekly pivot context. If you don't know what that is, again, I'll link it right up here in the top right corner. Please watch that. But this is gorgeous pivot context. If price fails to expand higher off of a fair value gap, keep an eye on the swing low that it formed inside of that fair value gap for a potential stop hunt to then continue pushing higher. That's essentially all pivot context is. So this swing low right here is actually the narrative PD array. Remember, we have a bullish bias. If we're going higher, where from? It could happen off of the sweep of this swing low. So in this case, your narrative would be a swing low. Now let's drop down another time frame and we're going to look for if there's bullish daily order flow agreeing with our monthly bullish order flow and our weekly bullish order flow. So here we are on the daily, and what we will notice is that this daily is actually currently showing bearish order flow. We have not flipped yet. In order to have high probability price action, high probability longs, we want the higher time frames all pointing north, which is not the case right now. Monthly is, weekly is, the daily is not. So what we would do here is we would wait for the daily to flip bullish. So let's move along in price and see if that happens. And as you can see, we have now created a daily fair value gap. Did you notice how the indicator automatically prioritized the most recent order flow legs right here? immediately deleting all of this old order flow. We always want to be in alignment with the most recent order flow legs from a top-down perspective. So now that we have bullish monthly order flow, we have weekly bullish order flow, and now we have daily bullish order flow, we have a high probability area to look for trades within. So inside of that daily, we can go down into the 1 hour. And now we're looking for our narrative PD array. If we're going higher from this daily fair value gap, where from? So we want to look for 1 hour bullish order flow displacing away from that daily. So as we move forward, you'll notice that it gets marked up right here. We have a 1 hour breakaway gap and we have 1 hour fair value gap. By the way, I'm not sure if I mentioned this already. The indicator also marks out the overlapping swing highs or swing lows. Essentially, it marks out your fair value areas right there for you. But anyways, you can take an entry right here on this 1 hour fair value gap alone. But let's say you missed that. You didn't want to take a trade during the afternoon, as Forex typically does die down and consolidate around that time. Let's say you wanted to wait for a 4 hour fair value gap. And as you can see, in case you did not just notice that, I will just run that back one more time. The indicator automatically plotted the 4 hour fair value gap over the 1 hours, because those 1 hour fair value gaps were just in the way of the 4 hour. It doesn't matter if the 1 hour is right here. All that matters now, once that 4 hour fair value gap is created, is the 4 hour. And I know it says breakaway gap. It's not exactly a breakaway gap. Let's just go to the 4 hour to show you. It's not exactly a breakaway gap. This is something we are working on fine tuning. Basically, it's a breakaway gap here because of this large rejection right here. It's like one of those sneaky breakaway gaps, but not really in this situation. We're working on that. So I would consider this just a regular fair value gap right here that we can easily trade into. Also, this is just a textbook impulse shift. Fair value gap in, fair value gap out. Also, again, this is what ICT would call a BPR. This super high probability area we can continue pushing higher from. So now we have 4 hour bullish order flow leg out of that daily bullish order flow leg. Now you can literally, if you want to swing trade, take an entry just like this, target a static 2R, and let's see how that would have played out. Beautiful. And by the way, once context is hit, because this trade target is quite a ways above ERL, you would go break even once this level is hit right here to protect your position. Here's our next example. This is a gold futures monthly chart, and we're going to use order flow in order to find bias. And in order to find bias, we must first start from the top down. Like always, remember, from the monthly, working your way down the time frames. So if we look at the monthly chart right here, we'll notice that we have very clearly are in bullish order flow. We have been in bullish order flow. We have been respecting discount arrays and disrespecting premium arrays, running through swing highs, creating new discount arrays, new support levels, also known as just fair value gaps, new order flow legs right here. All right, so the order flow is pointing higher. We have bullish order flow right here on a monthly basis. Now, does it make sense for price to, at this moment in time, want to retrace all the way down here to then continue pushing higher? No, I would consider these fair value gaps really far away from current price. So what we can do here is maintain a bullish bias based on the monthly order flow. And let's go down a time frame to see if there's any closer weekly fair value gaps, for example, weekly order flow that we can work with. So here we are on the weekly, and we do see a bullish order flow leg right here. Swing high, swing low with a fair value gap in the middle. Remember what I just mentioned about those monthly fair value gaps down below? As you can see them, they're below, but they are likely not going to get filled, right? These are breakaway gaps. So we can already push higher off of this weekly right there. So again, the weekly is also agreeing with bullish order flow. We have a bullish bias on the weekly. Now that we have context to work with pretty much on the weekly basis, we have weekly IRL to ERL right there. Now all we need to do is look for our narrative array, which is also going to be told by us by order flow on the lower time frames. So let's first dive down into the daily, make sure there's no sort of daily fair value gaps coming into this weekly fair value gap right here. And we don't, all right? So there's nothing to worry about there. The daily is not in bearish order flow. Monthly and weekly are in alignment. We can now just go down into the 4 hour and look for an entry function with order flow. We're looking for the narrative right here. If we're going higher, where from? So from this weekly, we'll notice that we have a 4 hour bullish order flow leg right here, displacing away from our weekly. This is a 4 hour impulse shift. Again, that's what the next video will cover, exactly what an impulse shift is. But this right here is already an entry, so you can literally enter at that fair value gap, stop loss at the swing low that creates the fair value gap, and you can target a static 2R right here. Or you can do, whatever you typically target. You can go for 3R, you can go for 4R, or you can go for the entire context, which is just targeting that external range liquidity. It's really up to your personal preference, just what you're comfortable with. Me personally, I am more of a static 2R guy. I love the low-hanging fruits. I love being in and out and just capturing my piece of the pie. So let's see how this plays out. So there's a 2R, and there is your context complete. Notice how the indicator will delete that IRL that we used from on the higher time frame once context is complete. And this is to keep your charts very clean and up to date with only the most recent levels. It's not going to clutter anything. It's going to keep your chart focused always on the most recent order flow, deleting automatically old order flow that has already completed context. Here's our final example. This is the Bitcoin monthly chart, and we are going to be using order flow to determine first the bias. Very clearly right here, we have a bullish order flow leg. Swing low, swing high, fair value gap in the middle. If we take a little further look to the back, we will also have noticed that we have been in very bullish order flow right here, with discount arrays being respected, disrespecting premium arrays, creating new discount arrays, disrespecting premium arrays, creating new discount arrays. So this is an extremely bullish trending chart. We have a very bullish bias told by us by the order flow and by the fair value gaps right here. This order flow leg is pointing north. But what we'll notice is that this monthly fair value gap is looking like a breakaway gap as identified right here. This candle, these two candles are already showing intention to want to expand higher, already closing below that swing high right here as well. This next monthly candle is likely to already continue pushing higher rather than pushing lower to then continue pushing higher, just based on the way this chart looks. So what we can do if we want to look for longs already, we can look in this candle's range right here at the weekly order flow. If there is a weekly fair value gap, for example, pointing higher, we can look at that as a context to already look for trades higher. So let's drop down into the weekly, and here is that weekly bullish order flow leg right here. Swing low, swing high, fair value gap in the middle, and we have the indicator marking out perfectly the overlapping area right here. Essentially, what this is and what the indicator does is it will automatically mark out your areas of fair value as well, which are extremely strong areas that price can continue pushing higher off of when they're overlapping with fair value gaps like so right here. And if you don't know what a fair value area is, it's simply when the market has offered buy side. So for a bullish fair value area, when the market has offered buy side, it has offered sell side and then offered buy side again. Everything inside this area that I marked from this high to this low has now been made fair, where buyers had a fair chance to participate, sellers had a fair chance to participate, and now this entire area is fair value. And when we move higher, the only area where there is a lack of fair value is this area right here, where again, we only have one direction of movement. Only buy side has been offered. So where's the furthest the market can retrace right here? Up to this level, up to the fair value area, where the market's already been made fair here. This is the only unfair area. So this really just becomes a very strong support level that we would expect to hold. Where if we don't hold it and we start displacing into it and start disrespecting this area of fair value, that means we are failing to offer fair value and likely seeking liquidity down at this low. But that's a whole nother topic for a whole nother video. That is what I call flip context. We'll get into that later. But moving along, this is beautiful weekly context. We are perfectly touching and respecting that fair value area. We can look for longs out of here. So let's go down into the daily chart and confirm that there isn't any sort of daily fair value gaps against us on this move lower right here. So let's go take a look at that. And what we see here on the daily is that there actually is currently bearish daily order flow. Remember, swing high, swing low with a fair value gap in the middle, the most recent one. It is pointing against us. So we have the monthly in line, we have the weekly in line, but the daily is not in line just yet. Price is stuck right now between this bullish weekly fair value gap and this bearish daily fair value gap. This is what I would consider trapped order flow. When price is stuck, it's trapped in this cage between a higher time frame premium array, up resistance level, and a higher time frame discount array, a support level. So it's between these two levels that are fighting to send price either lower or higher. So it's not very clear what price may want to do right here. So what do? We wait. We're patiently waiting and sitting on the sidelines until price either disrespects this daily fair value gap or disrespects this weekly fair value gap and eventually moves lower off the daily. And then if that were to happen, we can start to look short down towards these lows, for example. But we don't do anything in this area right here. This is where you're going to find the lowest probability conditions. So let's dive down into the 4 hour now. And you'll notice that we have a 4 hour bullish order flow leg, but again, that's not interesting because we just came into a daily bearish fair value gap. So I'm simply waiting for price to give me a new displacement over this daily fair value gap and then I will be interested in logging, as that will be a sign of disrespect. So let's just continue moving forward and see what happens. As you can see, we start to get very choppy right here, very directionless. They're all over the place. There's a bunch of wicks to the upside and downside. We have this major displacement off the daily, but we're not shorting that because, again, we're still in this weekly fair value gap. So let's just keep on waiting. Still not interested in this. I want to see displacement above this high, and this high specifically because it is the rejection high that sent us lower. I want to see price displace above this high, creating a fair value gap right through that in order for me to be comfortable looking for longs on Bitcoin. And right there, we get that displacement right through these highs, right through that daily fair value gap, signaling a disrespect. So now that we have this 4-hour fair value gap right there, indicator is going to mark it on this next candle. That is a valid entry. You see price moving a little too quickly on TradingView replay here, but this would have been your entry in that fair value gap, stop loss at the swing low of that order flow leg, and you can target a static 2R just like this, and this would have been your trade setup after you patiently waited for the trapped order flow conditions to get out of the way. Now let's see how this played out. Eventually hitting your 2R right there and completing the context. And again, notice how the indicator removes the context once we have completed it to keep your charts clean. So hopefully you found this lesson insightful. You learned a whole lot about order flow, how you can use it to find bias, how you can use it to find narrative, how you can use it to get entries. It is everything, and it is the core of my system and how I view price. For that reason, we coded it into an indicator to just streamline everything and save a bunch of time. Now, as you can see above, you can now try out all the indicators, this indicator alongside a bunch of others, which the next videos will be about and breaking them down, for literally $1. You can try them out for literally $1 for 7 full days. See if they're for you. If they're not, that's totally fine. You don't have to continue after, but I think it's a no-brainer to at least try it out. You get access to the risk manager as well, the navigator, and the Discord bot that we have, the Discord alerts, and a full-on indicator course. Literally, I believe it's like 120 plus videos breaking down all the concepts I use and exactly how to utilize these indicators to their max potential. All there, all for $1. I highly recommend you give it a shot. If you found this video insightful, I would greatly appreciate a like, comment, and subscribe. It shows me that you guys like what I'm doing here and inspires me to start making more videos, which actually this month is going to be very packed with videos. We actually are going to be releasing the next video in 5 days, not a month, in 5 days. So I'll see you in the next one. Have a great one. Peace out, fam.